To build anything that truly lasts, it takes time.
And what impact will it have on emerging markets, including India? To discuss this, we are now joined by Ed Yardeni, President and Chief Investment Strategist at Yardeni Research Inc., now joining us. Ed, thank you so much for taking your time out. And several developments overnight, one with respect to tariff, where US has gone ahead and now probably announced a deal with Vietnam. Tell us, what does this mean for several other countries, and do you expect US to sign deals with other countries as well ahead of that July 9 tariff deadline?
I think we'll probably will hear about a few more deals, but I don't think we're going to have all of the deals, and maybe not even half the deals. Looks like they're happening, but rather slowly. So I think on July 9th, the president may just impose some tariffs. Negotiations continue to go on, and maybe by doing that, the negotiations will speed it up.
All right. Hi, Ed. This is Kanishka also joining in. Very good morning to you, first of all. Now, let's, stay with the tariff deadline that we were talking about. I wanted to understand what's your view on India's landscape in this, India's position in this global investment landscape, especially, the kind of defense developments that we have had. How do you see India placed versus the other emerging markets, given that tariff deadline is looming on July 9th?
Well, I think India certainly is in discussions with the United States. I think it's going to be in the interests of the United States to make sure that a deal is worked out and that it benefits both sides. India is a very important counter point for geopolitical purposes to China. And so I think the United States is going to be somewhat easier on India than it has been on some of the other countries.
So that's as far as impact on India and several other countries is concerned. But Ed, also wanted your thoughts on the kind of impact tariff could have on inflation and consequently its impact on the bond market. How do you assess the situation as of now?
Well, at this point, we have, I think we've all been surprised that we haven't seen much of any impact of tariffs on inflation. Looking at the latest numbers through May, inflation has been remarkably moderate. The Fed chairman, Powell, has said that he doesn't anticipate that there could be inflation showing up at summer months. In other words, the data for June, July, August. And I agree with that. I think we will see some upward pressure on inflation. And of course, we also have the very weak dollar. The very weak dollar is also going to put some upward pressure on inflation. But I would point out at the same time that there's a lot of deflation coming out of China. China just continues to produce more than they can consume, and they're dumping it in global markets everywhere. And that's keeping a lid on a lot of inflation around the world. So I don't think inflation is going to be a serious problem. I think it'll be a problem for the next few months. I think it's probably one of the reasons the Fed will hold off on any easing move anytime soon.
All right, so that's the view coming in on inflation. But now I want to talk about the markets. Now, you had some time ago said that the geopolitical crisis are 2025's dominant bull market, and that one could look to rotate into safe haven assets like gold and defense stocks. But do you still hold that view, given the kind of rally we have seen in the U.S. benchmark indices, especially driven by tech stocks?
Well, I've been bullish on this market since November of 2022. The bull market started in the United States in October of 2022. And back then I was recommending and still recommend overweighting information technology, overweighting communication services, industrials, and financials. Those have all worked out very well. It was painful, of during the correction because they fell most sharply, but they've also come back most quickly. I also came up with the idea of overweighting energy, but so far that hasn't worked out, and I've kind of scaled back on that recommendation. On a kind of a global asset basis, I think that gold has been a excellent way to diversify a portfolio against the risk that tariffs represent, against the geopolitical risk, especially. Defense stocks still look very good to me on a global basis. So there's still plenty of opportunities in this market, which I think is still very much a bull market here, and by the way, in India too.
You're saying that you're bullish on defense stocks globally, in particular in India. If you can put the spotlight, what are your thoughts on the Indian equity markets, especially India versus other emerging markets?
Well, one of the positives for India is the low oil prices. India imports a lot of oil, and to have the price of oil so low is of great benefit to emerging markets like India. It's also obviously a positive for China, but for the exporters of oil, it's not a positive, obviously. But India also, I think, continues to benefit from the diversification of global supply chains. I think a lot of global supply chains that are continuing to move out of China have moved to places like Southeast Asia, including particularly Vietnam. But I think India has also been a point of destination for a lot of global diversification of supply chains. India has the benefits of a very young population, has the benefit of a population that speaks English. For global trade, that's important. For global interactions, that's important. And then, of course, India has a wealth of resources, not just labor resources, but the potential for a growing middle class is extremely important in India.
All right. Thank you, Ed, for that view on the Indian economy as well as the equity market. And thank you so much for joining us this morning and helping us with your views on the global market. Have a great day ahead. Thanks.
You too.
All right, then.